A&B is currently in a growth cycle that began with raising capital. In 2013, A&B significantly increased debt to purchase leasing properties and to fuel its development sales pipeline. What enabled A&B to do this without over-leveraging was the issuance of 5.4 million shares and the acquisition of Grace Construction. This financial maneuver allowed A&B to efficiently raise capital while undergoing solidified growth. The increase in liabilities and equity facilitated massive growth in total assets. This growth was complemented by a simultaneous shift in assets from the U.S. mainland to Hawaii through 1031 exchanges. Essentially, A&B underwent strategic growth concentrated in Hawaii, and in 2014 began to harvest returns. With these returns, top-line revenue shows significant growth and is forecasted to continue this upward trend as A&B capitalizes on its competitive position in Hawaii's strengthening economy. Following the shift to harvest, acquisitions dramatically decreased in 2014, enabling A&B to make full use of its assets. This in turn yielded expanding margins due to a refocus on operating efficiencies and synergies. With the top-line growth and the expanding margins, total operating income has also shown significant growth and continues to trickle into net income, which reflects the successful growth period with an extremely high CAGR. With earnings in a capital trend away from growth and acquisitions, cash flows from operations has increased dramatically as well. And this has in turn has led to increased cash reserves available for funding operations as well as cash flows per share. With these reserves, A&B has begun to delever itself through increasing its repayment on debt. However, we believe that with expanding margins and low interest rates, A&B is able to better repay this debt with a rapidly rising interest coverage rate. As such, A&B has financial strength and flexibility going forward into the future. Currently, A&B is reinvesting to its most profitable segment of development and sales to maintain its growth cycle. However, we believe that with the recurring cash flows from real estate leasing and Grace Construction, there will be an increase in dividend, and that a strong year in development and sales will give the potential for a share repurchase.
I don't know who approves development. Is it at the county level or the state level? And have you talked to...
If I've heard it right, I think you're expecting that at some point the company will begin or raise the dividend and do some stock buybacks. But is that based on any conversation with management about their plans? Is it just a possibility, or is it just as likely a possibility that they're going to acquire more land?
So as regards to the increase in dividends, so currently the strategy of Alexander Baldwin, as management has stated, is that right now they're experienced a high year of growth in 2013, and they want to use the recurring cash flows from their leasing portfolio as well as the Grace acquisition in order to fuel their development sales currently, as was in their earnings call, because this is their highest profit margin. However, because development sales is a cyclical nature and it is hot right now, but it is going to cool down in the future as it is a cycle, we believe that after 2018 that A&B will want to give shareholders higher returns, as they have recently begun to issue a dividend, which is a very low payout ratio of only 5%. So we believe that when the cycle turns down for development sales and begins to cool off, and they still have the recurring cash flows from Grace Construction as well as their real estate leasing, that they will want to increase their dividends.
Okay.
With a buy on Alexander and Baldwin, that was University of Hawaii at Manoa.